Hey everyone, welcome to The Upside with The Fourth Floor. My name is Sarah Feingold and I'm a co-founder of The Fourth Floor. The Fourth Floor is a female-focused entrepreneurial ecosystem. We help professionals get board seats and we empower startups to build out their boards. By connecting these two highly motivated groups of people, magic happens and careers and companies rise to the next level. Today, we are chatting with the amazing Emily Green from Elvis about founders and investments. And this is part of our series, The Upside. We're having conversations about how a major crisis can reorder society and how we as a community can help harness and promote the better. Emily, thank you so much for joining us.
Thanks for having me again. It feels like forever ago I was here.
I know, and guess what? We're going to have you again later this week.
Yeah.
Right now, we're talking about founders and investments. So please, Emily, introduce yourself and let's learn about this topic.
Yes. So for those of you who weren't able to join us last week, I'm Emily Green. I am an advisor at Elvis. So I came on to Elvis. If you don't know what Elvis is, we are a investment firm focused on helping women to close the gender investment gap. So the fact that women on average invest much less money than men, but on a bigger scale, the fact that there is a gender wealth gap across our country. And so on average, a woman has 62 cents of wealth on every man's dollar. So we are out to solve that problem. And I am an advisor, so I came on to start our private wealth business. And so that was really, we help people from if they're investing $1 to $100 million. And so making sure that we can have that full breadth of services, and I can touch more upon that as we're discussing. But thanks again for having me. I know that this is a very nerve-wracking time for people when it comes to thinking about investing. Especially even 6 weeks ago, we were going through times where we literally see the stock market up or down 7% in a day. There were these things called circuit breakers happening. I'll never forget, I came into work one morning and we have a lot of people, our engineers and marketing team and such, who don't come from finance backgrounds. And I came in from a meeting with our CEO, Sally. And one of the engineers was like, the market is closed. They closed the market. And I was like, no, this is like, this is a circuit breaker that they're there on purpose to help people like rationalize their decisions and such. And so, even people who work at companies like ours, it's a very nerve-wracking time. And I know many of you as founders, even more so, you're not only worrying about your own financial position, but I know a lot of it is just making sure that, number one, your business can get through. But I know as a founder, if you have employees, it's also just that worry if you can pay your employees at the end of the day. You're not only responsible for yourself, but all these other people and their livelihoods. So going through and thinking about what your investing can look like today. So I'll kick it off with a couple things and then we can move into some questions, just some kind of like standard types of things you should think through. So I think this is a great time for everyone to think about what their financial plan is in investing because we're all at home. We have extra time for not getting ready in the morning or commuting. And so instead of using that extra time to always doing work, we should dedicate a little bit of that to our financial plan. And I promise you will thank yourself in a couple of months, if not a couple of years. So how do you start? Like what's step one here? So really looking at assessing what you have today. And so that could be what amount of money you have in your business. That can be your income, your assets, your debt, as well as just what your budget is, your spending, things like this. I know that's not something that people typically have very readily available, but it's important to just kind of take stock of what everything looks like today. Cash that you may have put in your business, all these types of things. And just thinking about kind of where you're at. I've talked to a lot of founders where right before this, they were about to sell. And okay, you know what? My situation from 2 months ago is not where I am today. Or I was about to raise a round. My situation, life has changed. So it's just kind of being realistic of what this looks like for you personally today. So then, okay, now we know where we are. And then we have to think about, have a plan. And so this is really like one of the most important things of investing always in a lot of different capacities. So number one, making sure that you have enough emergency cash. So on average, we would say 3 to 6 months of spending. If you're in an industry that may be harder hit right now, you're worried about your business, you're worried about your job, perhaps keep a little bit more of a cushion, just in case something happens at the end of the day, you have enough cash in order to just pay your monthly expenses. You should continue paying off debt. I've had a lot of people come and ask me, should I, I don't have to pay off my mortgage now. Should I be paying it, with all these new rules? If you can pay it, you should still pay them. And then, kind of what our conversation today is, make sure that you're investing towards your future if you can. So putting in that plan a place of whether that's investing $1 a month, $10 a month, $10,000, putting in that plan to make sure that you are getting invested for what we always call future you. It's hard to look at where you'll be. A lot of people are like, oh, whatever, when I'm 60, when I'm 90, I'll figure it out. But you really will thank yourself if you start to take care of that today, and think about investing. And so just how can you create this plan? Just kind of a couple of ways to even start to think about this. So there are a lot of tools online to start thinking about budgeting and stuff. At Elvest, we have a couple of different ways you can think about it within digital, which is from $0 minimum. So literally you could have $1 to invest and you could put together a plan online of just thinking about, setting your goals. It'll help solve for you how much you need to be saving to achieve those goals, which is always a really hard reality hit. To having an advisor like myself or at a different financial institution. So to help you think through that. And when you're making these plans, it's really hard. It's really important to set your goals. So a lot of times people invest in a way that they're like, I'm 45 and I should invest like this. I'm 60, I should invest like this. But it really depends on your specific situation and your goals. Just because, two people who may look from the outside very similarly could have very different goals. And so it could be, paying for kids' college, buying a home, buying a second home, starting a business. All of those things are goals that you want to think about when you're designing your investment plan. And you want to create this in a way that you're really thinking long-term. And from there, you're going to be able to find spending, look at the spending goals that you have that fit into this plan and investing goals. And so when you're looking at investing for the long term, sticking to a plan is the most important thing. I cannot reiterate that enough. Like, if you said you're going to invest every first day of the month and the market's down 20% and you're like, oh, well, the market's down 20%, I'll just wait. There will always be an excuse that you can give yourself to not invest. And frankly, that 20% down day might be a great day to invest. And so making sure that you're sticking to that plan, no matter what. And that even goes to the side of if you sold a business and you have like a publicly traded stock. So for instance, if someone worked at Facebook and then they IPO'd and now they have a lot of Facebook stock, it goes on the other side too of like, how do I get out of my Facebook stock? Of like sticking to a plan, and just saying, every Tuesday of the month and not trying to overthink things over time, and being so specific about everything you're thinking like that. So let's talk more about like what investing looks like then. So investing towards your future, one of the most important things to think about is diversification. And what does that mean? And so we're looking at just investing in different things that may move differently. And so, for instance, a lot of your money may be in your business. So looking to invest in ways that it's not going to be correlated or not going to move along with whatever your business does. So your business is, it could be, it's one business, so there's more risk to that. So making sure that you're being more diversified, and you may have a tech business. Make sure that you're owning consumer products and utilities and all these different types of businesses. A lot of what people tend to do is if they work in a certain industry like tech or consumer products or things, they tend to buy what they know. And so if you work in tech, you end up with like I have so many clients where like they've worked at like Amazon and now they own Facebook and Apple and Amazon, and it's just like Netflix and it's just the tech stocks. But making sure that you have diversified investments so that if one bad thing happens to one company, you own all these other companies that can help you, still achieve your return. And that goes into, investing across different asset classes. And what does that mean? So what everyone talks about are stocks. Stocks are that's what CNBC talks about. That's what people are talking about when they're talking about the market. And so making sure that you are not only investing in stocks are going to be more volatile, so they're going to move up and down more. There's a higher return potential. But when you're investing in stocks, you need to make sure that you're investing for the long term. So we always, like in finance, we say for a market cycle. And so that means like if you were buying stocks, you should make sure that you're willing to own them through times like this so that it comes out the other side still higher. So when you're owning it, you want to make sure that you have a long-term time horizon for whatever those positions are, and investing in that. So there are other ways you can invest, like bonds. Bonds are a relatively safer type of investment. There's still risk to it, but they tend to be, we always call it more boring type of investment. But how I always think about it, a bond in kind of everyday terms, is think about your mortgage that you may have. And so the bank lent you money and you have to pay them interest every month. A bond is almost like you are the bank. And so the city of New York, so like the MTA, because the subway always needs more money, may say, I need $100 million. And so then you can say, all right, I'll lend you $1,000. And they have to pay you that interest over time. And so it's safer because the city of New York is probably not going to fail. It's probably not going to default. And there's not those fluctuations of ups and downs like there may be with a stock price within that. So you want to own some bonds, some stocks, and depending on that mix will depend on what your particular goal is. And then there's always there's alternative investments, which is quite complex, but if anyone's ever interested, I'm happy to go into it. But this can be things like real estate, gold, oil. It's just a very big field. Hedge funds, private equity, venture, that really ranges within it. There's no kind of like one size fits all within alternative types of investing. We use them at Elvis, but we're very specific about the way that we use them. But the main thing about alternatives is when you're looking at it is you're looking at for things that are not going to move, like stocks and bonds. So you want to have these kind of three different things together. They're not necessarily going to make the same move. So if right now your stocks are down 10%, well, your bonds are still up and your alternatives are still up. And so that you're not just looking at that side of the coin. And then a couple of more things before I give it out to questions is making sure that you're investing for the right reasons. So not investing in something just because your neighbor said it's going to be the hot stock, not investing in Zoom because you're like, I think everyone's going to be on Zoom, so the stock will go up. I can't tell you how many times I was asked that over the past couple of weeks, but you even saw like Zoom that had the issues with security and such. And so, their stock price wavered a bit. And also if you think you're not going to outsmart the market, there's plenty of people who are paid to do so, and they still don't always do a good job of it. So if it's not your everyday job, I'd say just, think about being diversified and not trying to choose investments just because it seems like the hot topic of the day. And finally, always thinking again to that plan. What is this money and why do I need it? What do I need to do with it? And so putting together that plan in that way. So this is a lot of information and it's kind of like, okay, great. How do I do this now? And so you can find many ways to do that. So you can have an advisor like myself. There's, the big banks have all these firms and such. And there are places like Elvis and other digital advisors where you can go on and you don't need to make these decisions for yourself. You have a full-time job. You're trying to do your business. And so we help you create that plan for you. So you're supposed to, saying these are my goals. And then we tell you how much should I put in stocks? How much should I put in bonds for this goal? How much should I put in alternatives? And we help you make that over time. Because I always joke that the financial education seems like something everyone wants until they start to have it, and it's so boring. And at least when you like do your laundry, you get clean laundry. When you do financial education, there's nothing, you're like, okay, great, now I know what a stock is, and I still have 100 other things to learn in order to put this in place. So there's plenty of resources. It's so different than it was 20 years ago. There's plenty of resources to get invested. There's plenty of ways to do it in a way that with no minimums now. Investing really used to be a way that you could only invest if you were very wealthy, but now there are ways to do so, like Elvis, that has no minimum. You can literally invest $1, and just kind of look at what investing will look like. And then lastly, before we go to questions, the only thing I would say is also, because this is an amazing group of women, the other thing you can also look at while you're investing, and I know we touched upon this briefly last week, is investing along with your values. And so if you care about gender diversity, if you care about the environment, there are ways to do that today. And so speaking to someone about the different ways you can do that, I'm happy to get more into that, but I do want to make sure that we get to all of your questions. So I will pause there to see what people want to talk about.
That was a lot of really great information, Emily, and I'm thinking about my own personal plan and whether I've stuck with it. And the answer is no. But I was just wondering, like, if you're thinking about a plan now in pandemic world, what world should you be thinking about for the future for yourself?
So, when we're planning, we always want to think. I had a lot of clients call me at the beginning of this and say, oh my God, is my plan, like, do we blow up my plan? But when we build plans, we are thinking that something may go wrong at some time. I did not think it was going to be COVID-19 and a pandemic, but we thought at some point you're going to see a financial type of crisis like this. You're going to see assets going down. You're going to see the economy hurt. And so you should plan for, you're planning for the future and such, but you should think through that things like this will happen. And when you're investing, your advisor and your investments, it's pretty much known that the market's going to pull back and it's going to go down, and things like this will happen over time. It's unexpected for this reason, but it's not unexpected that this happens at some point. Frankly, like, people have been talking about it for years, that the market had to go down a bit. But, I'd always just think about what your long-term goals are. And then the greatest part about some of these tools is you can play around and see if your goals are realistic. And so, for instance, like even in Elvis Digital, you can play around with and seeing like in bad scenarios and good scenarios. And so looking at what all those look like is say, right, if this pandemic like ruins the world and it's always the bad scenario, like, all right, that's what I'll be. So like maybe I need to save more money, or in great, and when the world is great, but it's most likely going to be in middle ground. I know it feels like this is never going to end at this point, but it will, and we will go back to a different everyday life, but the market and such, will recover as we've recovered from things before.
Yeah, and I keep trying to think that way myself too. It's just really hard to think that way when your hands are so raw from watching them, and you cannot watch TV without kind of getting a little bit more anxiety than usual.
Yeah.
But that makes a lot of sense. We're sticking with the plan and really thinking about the highs and lows. And it's good to know that there are tools out there to really help us be intelligent and thoughtful as we invest the way we should invest for our own personal self. How does Elvest differ from investing at your traditional bank?
Yeah. So a couple of things. When we started Elvest, it was to solve why are women not investing? So women on average keep 70 cents of every dollar in cash. For a woman who makes $85,000 a year, that costs her almost $1 million over her lifetime. That is a lot of money. And so, thinking about this, investing matters a lot. And so we came in to say, why aren't women investing? And so when we're looking at everything, how I was stressing creating goals, everything we do is goals-based. Again, it doesn't matter if you have $1 or $100 million, we're always looking at what your specific goals are. And then the most important things of how we differ is that we look at your gender. And so this is crazy, but the industry in general says they are gender neutral. But in fact, when they're looking at these projections and such, they are looking at a man. They look at a man's life expectancy, a man's salary curve, and a man's, so men's salaries peak sooner in life, and they also make more money over time, unfortunately. And so they're always looking at that. And we take into account the fact women live longer. Women's salaries peak in their 40s instead of like men's in their 50s. And we, our salaries are unfortunately not as large. And most importantly, we also take more career breaks. So we may have children, but also we may have to take care of like our parents doing these things. We tend to be the people who do this. So when we're putting together those projections, you'd see when you put your plan in place, it would give you different advice if you're a man versus a woman when you're doing that. So that's one of our biggest differences to start with. And then a lot of what we do is focusing on ways you can invest along with your values. In our digital business, we've created gender lens portfolios focusing on all things that have to do with, that affect us as women. And in our private wealth business, we were able to build a way that we can build amazingly customizable impact investments that are actually have reportable impact over time. So you could actually see like, how many more women do I have on my boards? How many more women do I have on the C-suite? How many less carbon emissions do I have? All these cool types of things.
That's great. And thank you so much for that information. And it makes me feel terrible to hear that, you know, we're just not being considered in traditional banking, but it's good that you're considering us.
The symbol of the industry is a bull. So, you know, it is just a male dominated industry in general. It's actually, it's funny because the wealth management industry women always rank last on their list. If you like ask them to rank like 32 different industries that serve them, it's always last. But for some reason, it's not something that's been solved for.
Right. Well, you're solving for it. Let's solve for it together and let's make more money so that we can have more power and continue to solve for it. Just a note of information, if you want to privately message me about some questions for Emily, that's great too. I'm also looking at the public messages, and so I will be asking Emily for some of those. What about sharing thoughts about cash liquidity at this time versus investing?
Yeah, so you should definitely, as I mentioned, kind of that emergency cash, you should definitely have some liquidity. And so always 3 to 6 months of cash. But maybe if you're in a job that you could lose your job, if you're a business owner that you may need to put cash in your business, maybe keeping a little extra cash is okay, you know, year's worth of spending. So you look at your expenses, your mortgage, your food, all those basic life items that you may need, and just keeping that aside in a checking savings account. And then right now, you know, if you have excess cash, it's actually a great time to think about getting invested, because when you think about it, while stocks have come up a lot from where they were in March, they are, you know, what we like to think about is like on sale. So they're less, you know, if you bought something if you were looking at it as $100 and now it's $80, it's cheaper. And so if you buy it today, you're buying at a cheaper price. And I know it's very hard psychologically to do so and invest when it looks like the market is going down and the world is ending. But I will tell you, the market will recover before you've seen the world kind of back to normal. And so when you're thinking about investing, you need to start investing now. And so if you invested in 2008 when it felt horrible, you'd have been much better off than if you started investing in 2010 when we were in a much better place. And that's where this consistent investing comes in. So if you have excess cash and just say, you know what, I'm just going to invest 10% of it over the next 10 weeks, and then I'll be fully invested, and I'm not going to look if the price is up or down. I'm just going to make sure that I'm getting that invested and putting that plan in place to do it.
It's really difficult to not look at the prices after you bought something, you know, and think, should I have bought it yesterday or tomorrow or what's going on? But you got to stick with your plan is what I'm learning from Emily over and over and over again. So question about valuations. As you're looking to raise money or get an exit or sales processes completed, how should founders be thinking about gauging their valuations today?
Yeah, so it's going to be a very tough time. You know, a lot of people have pulled back their investments in general. I've talked to a lot of women, you know, and people who had offers to be bought, people who had offers for investments. People are just kind of taking that off the table And that doesn't even include venture firms. That includes families who act as, venture investors and such. So, it is always understanding kind of what your value is versus your competitors, what else is out there. But also, what I think a lot of people forget about their valuations is, your worth is going to be different for different investors. And if you're being bought, it's going to be different valuation for if someone finds more synergies in your business. So making sure that you're finding that business that's going to have their right synergies with you so that you're getting that right valuation. I mean, the thing I will say is this is just going to be a very tough time for all of this. Frankly, it's going to be hard to see, I think a lot of things are just going to get put on pause. Because if you look at venture firms or big companies, they're just trying to keep themselves alive right now, rather than making new investments or doing any kind of mergers or acquisitions.
Yeah, I mean, it's hard for so many companies, and especially the small ones that were getting some traction and we're feeling really good. And then a worldwide pandemic hits and you're feeling really helpless in the situation. And I mean, you probably are still valued very similar, but the world has changed. And so now your value has decreased. So here's a question. Can you explain, oh no, it just moved. Can you explain to women how to look at the fundamentals of a company via Yahoo Finance, to see their P&L, balance sheets, cash flows, and to learn the language of business, even if you're not an accountant? Like, these are the stocks that will survive.
Yeah, so again, I would say this is where you don't want to be picking and choosing specific businesses. There will be winners who we predicted and losers who we predicted, but there will also be the opposite. There will be winners and losers that we did not predict in all of this. And so rather than spending your time doing, looking into all of this, because it does, once you buy a company, so say you go and buy Apple stock because you're like, I really love my iPhone and I use a Mac, you need to monitor everything that goes on with that company. It's not just I liked it then and then I'm going to hold it for forever. You need to be engaged in it and look in it. And many of us are busy, and there are people who do that because they want to look at it on a daily basis, but you want to make sure that you're owning all different companies. So rather than looking at individual companies, I would encourage people to look at funds in ways that compile a number of companies. So there's something called ETFs, exchange traded funds, and index funds, as well as mutual funds. So these are funds that buy positions in certain companies. So you do own stocks, but you're owning a basket of stocks. So again, that means just because if Apple goes down doesn't mean that Facebook goes down. And so you're owning all this basket of stocks so that you have more diversification, because there's something called, there's company risk and there's market risk. And so if you own one individual stock, you're taking both market and that individual company risk. If you own a basket, you're lowering that individual company risk by a lot. And so just making sure that you're owning all these different companies in order to think about that. You can, find a lot about that. That said, if you really do want to learn about it, we have a magazine on our page that we put so much information on. I feel like sometimes we're just like a content shop. And so feel free to kind of go through there. You'll see there's an investing section. And if you wanted in your time to learn more, there's a lot you can do with that.
It's sort of like, don't have all your eggs in one basket.
Exactly.
I am learning something from you every day, Emily. Thank you. Well, not every day. Unfortunately, you're not. We're not that close. What's the difference between ETFs and mutual funds?
Yes. So when you're looking, a mutual fund is traditionally an investment fund that has a real human making decisions and trying to beat what the market is. So let's just use the S&P 500 because that's what the most talked about market is. And so the S&P 500 is 500 large companies within the United States. And so a mutual fund, if say we're looking to do that, they might choose some of those companies because they're looking to beat whatever all those companies do as a whole with that, what the S&P 500 does as an index. The mutual fund manager is like, I'm going to choose I'm going to choose GE. I'm going to choose this. They're going to go choose the different companies that they want to buy and sell. And they typically are more expensive because you're paying someone to make these decisions. The biggest thing to think about mutual funds is on average, they do not actually beat the market. So if you look at especially large company mutual funds, they traditionally do not. So you're paying higher fees. So it's harder for them to also beat the market within that space. ETFs are similar to index funds. There's some intricacies that I could explain, but no one probably cares. But so ETFs and index funds are more similar in the fact that they traditionally are not based off of having a human make these decisions. They're based off of trying to track what the market does. So if in this example, the S&P 500, it just want to track exactly what that market does. And so they tend to be a lot cheaper. So like, for example, a lot of mutual funds could cost you 0.8%, 1% a year, where a lot of these ETFs and index funds could cost you 0.03%. And so looking at the costs of the investments is going to be very important for you over the long term. So just thinking about what the right way is for you. For us, we typically favor in efficient markets, which tend to be markets that like the US, developed international markets. These will tend to be markets that are very efficient. So you can't really there's so much data and news out there, people are trading right away if there's news on something. And so it's really hard to beat the market. So we tend to look at, let's find the lowest cost way to get you access to that market rather than you paying 1% and then still not getting that. And so looking at, where you're investing and what an ETF and mutual fund is right in that sense. And I'll say there's a million ETFs and mutual funds out there. And this is where an investment advisor is very helpful in thinking about this.
Excellent. Thanks. And could you also explain how SPDRs compare?
Yes. So these are what we call in finance the Spdr indexes. So they're going to be very similar to like SPY is the US one. So they're going to be very similar. They're going to act more similarly to the index fund or ETF than a mutual fund. So much more index focused, typically cheap. And so focusing on that side rather than a mutual fund, where again is going to have an actual person who's trying to make active decisions. This is what's called active versus passive. So ETFs and index funds are passive, is what we call. Mutual funds are typically called active in thinking about it.
Interesting. I just want more money though.
Same.
Okay, just making sure we're all aligned with that. Okay, so for founders, do you recommend convertible debt or equity during a pre-seed round from a founder and investor perspective? And what do you think the pros and cons are for each decision?
So, that's really going to depend. So, when I think it's going to depend on a lot of your business, the type of investors you're looking for. I know even us at Elvest, we have venture investors and seed. We did large seed investors. So rather than lots of little seed investors, we kind of had one large seed investor who came in to fund us from the beginning. And it's going to depend on your relationships with these types of people because they're going to be within, part of your business on a day-to-day basis. So you want to make sure that if you're finding people, you want to find the right people. You want to think about these things. This could be like a topic in itself, frankly. So I won't say too much, but I can be happy to send people kind of some information on this as well. But I'd say this is an extremely important thing when you're thinking about kind of like how you're starting your business. But it's going to depend on kind of what your specific business and your personal situation looks like during it.
Could you give an example of someone's specific situation and what they might choose?
Yeah, it's going to be, for instance, like for us, like Sally was a well-connected person. We were able to get a sizable beginning seed round from a very well-known financial firm in the space, Morningstar, which is that firm that ranks all the ETFs and mutual funds and such. And so for us, that's a great investor to have for not only having money, but also for the fact that they're very reputable in the space. They're able to help us kind of define how we're, looking at our business and such as we were thinking about this. But, on the convertible debt side, there's a lot of things that go into this, but I'm happy to, and also if anyone wants to like ping me offline, I'm happy to kind of like talk more about what that looks like.
Great, thanks. Thanks for the example. So another question is, Elvis is a great resource for gender lens investing. Do you have any other gender-friendly resources like publications or podcasts that you could recommend?
Yeah. Oh my God, I feel like this is all I do with my life. So it's like, is listen to these types of things. It's, if you actually have not read this book, there's a book called Invisible Women. It is all about the data. It's all about how society was built for men and all the ways that we did this. I actually have it on my nightstand right now. If you haven't read that, I would highly recommend doing that. It will be very eye-opening of how society was built in this way, from everything like healthcare, the fact that drugs weren't tested on women till actually pretty recently, to things that will like blow your mind when you think about it, to just like how everything, the little things you do every day, were created. If you're looking for like crowdfunding, which may be interesting to some of these people, there's a friend of mine, Karen Kahn from I Fund Women. She is a crowdfunding campaign for women. She's also just awesome. And she does all these, she does a ton of, she's always on her Instagram. She does a ton of, live things. She did one with us last week. She has great resources for founders on a lot of like the gender lens side. There's a whole host of.
She's fantastic. She's fantastic.
Yeah. One of my favorite people.
Could you recommend any funds that are investing specifically in women?
Like VC funds?
Yes. I don't know. That's the question that was sent to me privately.
So we look, so in terms of venture funds, I would say, there are some that are focusing more on making an impact. So there's like Rethink Impact, True Wealth. There's Astia. There's Female Founders Fund. There are some out there. BBG Ventures. Yep. Susan. And so there are some out there who are trying to make an impact. But there's also a lot of there's women, if you looked into like the All Raise Women, they're the group of venture investors of women, they're kind of like the Time's Up of venture investing. So there's a lot of great women you can find on their site as great resources too. And
definitely over in the chat, people are sharing some other resources for this very specific question, and that's wonderful. So here's a question, and I'm not sure if this is exactly what we're talking about here, but might as well put it out there. What about a partner or a relationship in your life and protecting your money via a post-nuptial agreement?
This is very important. Yeah. So I actually did a call with an attorney for our clients last week, the week before. I don't know, time is blending at this point, about when you're putting a plan in place together, especially as a founder too, all of your trust and estates planning is going to be important, not just a prenup or postnup, but things like your will, your power of attorney, your healthcare proxy, but also pre or postnup. I cannot give legal advice, but if you're in a relationship and you're legally in a relationship, especially if you're a business founder, there are things that if you live in certain states like California, that is a 50-50 state, and something happens, you can end up with your partner having 50% of your business. So planning for those types of things is extremely important, not only for protecting your business, but just protecting yourself in general, and making sure that if something was going to happen to you, that your family is planned for at the end of the day, and that they're not going to have to go through a hardship if, just because there wasn't documents put in place.
Yeah, that's really important information, especially as you're coming up with a plan. I think that you probably should, if there's somebody legally touching you, maybe that they could be part of the plan too, so that you're all aligned with everything.
Yep.
Yeah. So here's a question. Is it possible for someone to ping you for specific questions regarding structuring seed investments? Is that something that?
Yes, I will put my email right in the chat, and anyone.
Emily's email in the chat. How lucky are we?
So anyone, you can feel free to ping me. I'll just leave my email. It's right in the chat if you want to send me a direct note about anything, just even, that you don't want to ask, like, this feels more personal.
That's really generous of you, Emily. Thank you very much. Thanks. Do we have any other questions? I think I got through most of them in the chat, but if you have any other questions, I would love to take them now. Otherwise, I could go to our last question for Emily. I want to just make more money, Emily. This is like the goal, right? Can we do that?
Same,
Yeah, and live in cabins without the ghosts.
Yeah. So actually there's a quote that Sally keeps using, that if you invested, and I'm not going to get it right, so please don't quote me on this, but if you invested in the early 1900s, $1 on the stock market, and you looked at and you thought about World War I, World War II, the Cold War, 2001, 2008, all these different things that we've gone through over this time, and someone was like, hey, invest $1, and you knew, you had foresight of all these things that happened, you'd be like, oh God, no, like I'm never going to. And it was $1,000 is what this is. Definitely, I remember now, it's $1,000. If you invested $1,000, and how much do you think you would have? And everyone always says like $1 million, $2 million, like this, you'd have $52 million. So even, with all these terrible things happening, you need to make sure that you're getting invested and such. And so if you invest, of course, no performance is guaranteed and such, but the markets do tend to go up over time as companies grow.
You're sounding like a lawyer with all your disclaimers, but I like the positivity of the statement.
My compliance team, I worked at a bank long enough. I know the things I have to disclaim. Disclaimer,
not legal advice, not financial advice, disclaimer. Yeah. Thank you so much, Emily. Before I ask you my final question, I just want a couple housekeeping things. Emily is back talking with us one more time on May 7th, which is in 2 days. We might just keep her on Zoom for those 2 days. Whatever. She's so wonderful. I would love to do that. But it's on May 7th at 4 p.m. She can take a break and a nap and maybe drink some more LaCroix. And she'll be talking about angel investing today. If you want more information about the fourth floor, go to our website, thefourthfloor.co, about membership. We have events. You can join our mailing list. Follow us on LinkedIn. If you like what we do, give us a comment, give us a shout out. We love all of that kind of stuff. Members, we have a members only directory, a Google group. We have what's called The Room, which is our exclusive online board seat exchange. If you are a founder and you want someone on your board, you can post what you're looking for. And if you're a professional and you want to be on an early stage founders board, you can explain your board bio and give some of your superpowers. And we're putting people together and putting women on boards to like rise up everybody. We're always looking for additional sponsors. We appreciate any sort of connections. Those were the things I wanted to say, but before we go, one last question for Emily. What is the upside of all of this? What is the upside?
And so as we invest, especially as women, I talked at the beginning about the gender, not only the gender investment gap, but the gender wealth gap. And so the more money that we have as women, the more power we have together. And so if we look and we invest our money and we have more power and we invest it in a way that is along with our values and is good for women, we're bringing up women, not only ourselves, but others. And the more that you get invested, the more that you talk about it to your friend, it is really a chain reaction of thinking about, oh, if my friend's investing, I should be doing it. So the more that we're having these conversations, we're bringing up the whole tide together. So I encourage you all to even just think about this afterwards and also just have conversations with your friends about it. And we're all become more powerful through this.
I love that. Let's all talk about money so that we all can get richer.
Yes.
Thank you for your generosity, and thanks for being with us the second time and for the third time, which will be in a couple of days. Thank you again, Emily. Thanks for everyone who joined us, and we hope that everyone contributes to the upside. Thanks. Bye.